Yes, we're charging ahead, and it's because we can. We couldn't for 5 years, and now we can, and it's important that we grab it while it's there, and that's what we're doing.
Hello, you're watching Proactive. I'm joined by Kefi Golden Copper Executive Chairman Harry Adams. Harry, good to speak with you again. You've released an RNS that gives the impression that Ethiopia and Kefi in Ethiopia are leaping ahead. Can you take us through that?
Well, Ethiopia is an astounding country, really. When I first arrived there 10 years ago, um, uh, the first thing that struck me is that I'd never seen such hardworking government. Um, the only possible comparison I could give is about 40 years ago when I first visited Japan and South Korea. Those countries are on an almost militaristic style mission to build their economies or rebuild their economies. And that's what I saw in Ethiopia is one of the things that really impressed me. So, I think we all probably know that Ethiopia went through a bad patch since then, in that the first few years it was the positive picture I'm painting today or now. But then after the introduction of democratic reform, a lot of instability emerged, and then there was sort of 5 lost years as the economy suffered and the country stalled. And in the last 2 years, it's on again. The same hardworking style of government, the same determined people, but for 5 years they were focused on things that were damaging themselves, really, with the benefit of hindsight. But now it's all about getting back onto that growth path with a determination not only of the traditional values of the country and of wanting to develop and develop its people, the second largest population in Africa, 120 million people, the size of France and Spain put together geographically. So it's a major, major country that's based with the African Union and so on. And so that's returned, but now the issue is private sector growth. It was in the top 20 growth countries of the world when we first arrived. It had been for nearly 20 years. And now it is back in that position as of now. And it's because of private sector initiatives. They've floated the currency recently. They're admitting foreigners into the banking and the insurance, the financial system. Any number of reforms, quite profound. The IMF has given them a major development package. They've rescheduled international creditors, and they've prioritised mining. And we've been at the sort of the head of that reform in the mining sector. So the backdrop for this company in that country was extremely positive when we arrived, turned extremely negative for 5 years, and it's now back to being extremely positive with an even greater momentum because of the self-inflicted damage that needs to be repaired to the country on the economy from all that infighting that went on. Kefi? Well, we don't control all the cards that determine the outcomes in the mining sector. That's pretty obvious to anybody who's got any involvement with the mining sector from any stakeholder position. But, when the stars align, it's quite rare to have all or most stars aligned for mining. And, almost all stars are aligned. I think the stock market, the capital allocation to the mining sector in the stock market is probably at an all-time low. So that's not aligned. But pretty well everything else is aligned, really remarkably. Metal prices, the politics and economics of the host country and our other host countries in Saudi, it's the same similar story for different reasons. And our projects being ready to launch. The first project being ready to launch in Ethiopia. So yes, we're charging ahead, and it's because we can. We couldn't for 5 years, and now we can, and it's important that we grab it while it's there, and that's what we're doing.
You report that you're in the final stages of closing project finance so you can launch major works at Tulu Kapi. Now, we all know it's a tough capital markets for junior miners, and clearly the stock market remains intrigued but skeptical of how a small listed AIM stock can raise so much money when the AIM mining sector is at a low ebb. I mean, no matter how one measures it, Harry.
Yeah, well, it's understandable skepticism, because most people haven't lived through what we've lived through, and most people haven't done what we've done. And if we relied on AIM, and if you were surrounded by, if that's your working environment, the stock market and AIM, that's the environment you live within. So it's pretty difficult to imagine another environment that could somehow remedy the the doldrums of the stock market for this sector. Any which way you cut it, this sector's indices peaked in 2011 and are now a very tiny fraction of what it was then, whichever stock market you look at. It's not just about AIM. And so the question is a good question. It's a legitimate question. Conventional project finance, for a good, robust project in a jurisdiction that provides a proper regime and regulatory environment for operation, conventional project finance should cover 70%, of the capital requirement for development. So that's not rocket science. That's just a function of management and the quality of the asset. And we've had support from project financiers ready for when the country settled down for years. And it's because they know us. From our prior lives, we've started projects successfully, and they know they can trust us and so on. So that's 70% of the answer. The other 30% of the answer is just being dogged on the ground in these countries and developing relationships in these countries. And in Ethiopia, we've got the government as a partner. In Saudi Arabia, we've got a family office as a partner. And in Ethiopia, there'll be more local institutions and others deploying capital into our structure. And in a sense, it's a lucky break because they can't invest outside Ethiopia. They're not allowed to. So where do they invest inside Ethiopia where they can get a gold or US dollar hedge or both? Yeah, it's almost a unique opportunity for them. So doggedness, familiarity from past work, and a country which happens to present an environment where local capital will deploy. So if we'd relied on the stock markets, we couldn't have done it. We've had to rely on the stock markets for our own working capital. That's caused a lot of dilution, which has been damaging to our share price. But the scale of the upside, there's tenfold plus upside in this stock as we speak, based on the basic industry style metrics. Are plenty to go for, sort of thing. So I hope that answers the question.
Harry, what market trends are most important to you today, and what are you doing to address those trends?
Well, market trends, and the gold price is the standout. And, when we get a bit closer to pouring gold, if the market pricing was the same as it was today, we'd be looking to lock in with some puts or something like that. It doesn't take away the upside, but you can lock in at very cost-effective premiums. The current gold price of $2,500. It's a remarkable opportunity. 1 year's cash flow at Tulu Kapi, net cash flow, would repay all the banks in 1 year if you wanted to. So these gold prices are a wonderful opportunity to make some money and so on. That's one trend. The other trend, I think, is I think, for what it's worth, I'm no pundit, I'm no share trader, and so don't listen to me in terms of what you do tomorrow. But it feels to me like the allocation of capital to this sector will change dramatically over the next year or two. The market, the politicians have overdone the lack of securing of the resource base for the electrification of the world and for other metals. The penny seems to have dropped, that countries like China and Russia have been at it for decades. And the West has put out instructions to deploy capital to secure a pipeline of resource availability for critical metals. That will filter into the endowment funds and the institutions and work its way through to the stock market as well. And I think there is some evidence. I've probably received more calls from institutional type investors in the last, couple of months than I'd received in the previous decade. And that just shows that they're opening their files. It doesn't mean to say they're ready to put money in, or one can't presume that. Some of them may, some of them may not, but they're certainly focusing on this sector. And I think that the wave of M&A that's come through the sector is an indicator of that. So, when everybody's down in the doldrums, when nobody's optimistic, all common sense tells you that's the bottom of the market. And I'm seeing the evidence that that's starting to turn. So what do we do about that? I think if local capital is ample, and we're positioning to list some of these securities locally, in Ethiopia and in Saudi down the track, if the local capital truly is there and truly wants to deploy into this sector, which I think it is, I think we raise more money than we necessarily need and expand Tulu Kapi whilst the going is good. Lift the production profile, extend the production profile, and take, and the local capital is being deployed at valuations of hundreds of millions of dollars, at proper valuations, not this Mickey Mouse stuff that goes on with everyone home trying to chew each other's fins off to survive in the goldfish bowl. So it is exciting, but unfortunately, the capital markets on the stock markets in the West have killed many of the players over the last 10 years. I don't know what proportion of companies are left, but it's been extremely harrowing for a lot of people. We've suffered dilution, but the positive outcome is that we've positioned the company to take off. So we can get on with it and hopefully deliver the rewards that people deserve.
Harry, I hope those final stars align for the company. Thank you very much for the update today.
Thank you. Pleasure.
That's KEFI Gold and Copper Executive Chairman Harry Adams.